Ain't it a great day? Ain't it a great day? Ain't it a great day? Ain't it a great day?
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 29th, 2025, and Bitcoin did indeed break out during the weekend, okay? It broke that sideways consolidation that we'd been in and broke to the upside as we presumed it would, but many people are not going to expect what comes next. We're going to talk about that. We're going to talk about altcoins and much more. If that all sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get into it. All right, Bitcoin on the 4-hourly time frame. All right, the idea, it's a high probability trade thesis, always has been. You are at the base of the 70 plus day channel, right? This is the base of it, right? This is support of the channel, and you dip down into support the demand zone, and you're getting a reaction to the upside, okay? And obviously, we were talking last episode about this mini range and how this mini range was more likely to go up than down, okay? It was more likely to go up than down. Why? Because you had been going side to side in a small range at the bottom of a high time frame support level, okay? At the base of support, right? This is all support. This is support of support, yeah? So it's likely any sideways consolidation at the base of a high time frame range is going to be an accumulation range, which yields a move to the upside. That's exactly what we got. And also remember, the analysis was, I'm also leaning to the upside because here the price action had overtaken the midline of that mini range, and so likelihood of a breakout was higher than a breakdown. Okay, so we got the breakout. What next? I want to zoom out just a bit because it's really important to keep in mind the high context, high time frame analysis. A lot of traders, a lot of analysts, a lot of market participants are going to be confused, right? People are getting the wrong kind of bullish. I don't want you to be the wrong kind of bullish. Please understand, on a high time frame, we are bearish AF. Like, this is not at all bullish. High time frame, you are still in a massive distribution channel, really, meaning a channel that's likely to break down. You're at the top of the top, and so that is very high probability, high time frame. Zooming in now, you are now just considering this, top 75-day channel, right? There we're bullish. We're bullish on this. Why? Because, from our Elliot wave analysis, this is likely an A wave. This is likely a B wave that has yet to put in its impulsive move. Okay, so that's basically what we're doing and what we've been doing for the past 70 plus days. We've been putting in a pivot, what I call a pivot, which is the final pair of the three corrective pairs necessary for consolidation to be complete in according to AB based theory in Elliott wave analysis. So again, this is your A wave, a 3-wave move down. This is likely just a B wave, and so that's why I'm saying we're more likely than not going to get some sort of pivot up, some sort of impulse up, and that's what we are in the beginning stages of. Now that you have the context, now that you are clear that you're short-term bullish, mid-term bearish, now let's go into why we should expect, now don't get confused, in the immediate short term some bearishness, but then more bullish continuation, because as you can see, the target is up here, right? It's up here for a couple reasons. It's up here for reason number one, that you again are putting in a corrective pair. These corrective patterns, these flat corrections, this A wave, this B wave, they go together. You can't have one without the other. And typically, when you print one, the B wave comes to a minimum of 78.6% of the distance of the A wave. Minimum. Typically, in these situations, the B wave goes 100%, 90, 98, 100%, or even 123%, right? So, the other reason, that's reason number one, the other reason your target, your final target's up here somewhere, is because it looks like you're putting in one final bearish reversal pattern. And remember, these bearish reversal patterns are head and shoulder patterns have two shoulders and a head. The head is right here. This is the left shoulder. This will be the right shoulder. Your right shoulder has yet to be formed. I'm expecting it to be formed up here somewhere because this is the area of testing, right? The top of the range. Last and final reason why you should expect us to come all the way up here. Look at the liquidity data. Again, I direct you to CoinGlass. It's a free resource. I don't think any indicator should be used. My friends in Korea, I'm speaking to you. I don't think any indicator should be used in isolation, right? Indicators are meant to be used as a tool to complement your price action routes, because indicators in and of themselves are too buggy. They don't tell the whole story. There's too much blind, there are too many blind spots, right? And it's easy to get confused. So the best thing to do is to do what we're doing right here. Do your price action technical analysis. Use some indicators to see, okay, maybe that confirms or denies my price action thesis. In any case, here we have the liquidation heat map model 2, my favorite, on the 3-month. For Bitcoin, this is the super chart. So remember, the super chart means we're not only looking at Binance, we're also looking at Bybit, we're also looking at Bitfinex and all the major exchanges with the highest liquidity. Okay, remember also that the line green in yellow areas are areas of liquidity. That's where price is attracted to. Price loves to feed on liquidity. So right now, where's the closest area of liquidity? It's actually right below us. But that doesn't necessarily mean, here's one of a great example of a blind spot. A lot of people fell into this trap over the weekend. They pulled up this very same chart and said, you know, Bitcoin may want to move up, but first it's gonna feed on this liquidity right here because that's the closest and strongest and largest pool of liquidity. Yes, that's true, but your conclusions are false. It does not necessarily need to go down then up. Bitcoin or any other asset will feed on liquidity based off of a variety of factors. So this is just one piece of data, all right? So we do have liquidity beneath us, but that's normal because people are longing this move. So they have their liquidation levels and they have their stop losses down below the meat of the move. But the next likely level, and what we've been saying is, you see, peak 1, peak 2, that's left shoulder, that's head. Right shoulder is going to be around here. It's more likely than not going to feed into this liquidity at around 124, 125. Don't be surprised if your right shoulder comes up to 124, 125. Feed in to that liquidity and then goes down and grabs all this liquidity and then a lot more liquidity beneath it. Okay? But you can see here we're in a liquidity desert. The move to 120, 125 is going to happen. Now, after saying that, having said that, many people are going to miss this. I teased this in the open. What am I talking about? I'm talking about the fact that things don't go in a straight line, right? A lot of market participants are amateurs by definition. In any market, that is how markets work. Most people don't know what they're doing. But for you who are watching this video, you know very well, even if you're not Elliott wave experts, that nothing goes in a straight line, and more specifically, things go, when they're impulsive, in 5-wave sequences. So I have a tentative 5-wave sequence, so how the price matriculates to our ultimate target before coming down, okay? And as you can see, that first target is more likely than not hit. Okay, why is the current price around 114, let's call it 114 thereabouts, the first target? Well, the current price is the first target simply because this represents the bottom of this channel. You dip below this channel, you caught back, you dip below again. This is resistance right here. And resistance now is going to be broken, but not quite yet. How do you break resistance? Not at resistance. You reject, get liquidity, or you gather momentum, right? You grab liquidity, yeah? So you reject, you grab liquidity, and you come down. I'm pretty much just saying, do expect a wave 2. Wave 2 in Elliott wave analysis means a 62% retracement of your first wave, okay? More specifically, wave 2 typically takes around the same time as wave 1 took. So whenever wave 1 finishes, and you'll know because you're going to get that quintessential initial break of structure. So maybe wave 1 ends up here with one final move up there around, 114, 115-ish. That first move is going to be a big move. Then you're going to come up in a B wave, and then you're going to finalize it with a C wave, a 3-wave corrective pattern. It's likely to be sharp because wave 2 corrections are sharp. But another piece of very important information is, using Elliott wave, we can say at the very least that this retracement is going to take at least a day, because up until now, our move from the midline of this channel has taken at least a day, okay? Or you can say maybe you can start the impulse from the top of the channel. Either way, it's around a day, okay? I don't know how much long we have to go in this wave 1, but it's not that long. So I'm going to assume we end this wave 1 at some point during the trading day today, and then wave 2 take around the same time. So don't expect that retracement, and expect a retracement of around 62%. Expect a retracement that takes about a day, and that finalizes around market close on Tuesday. Okay, that's what Elliott wave is telling us with a high degree of probability, given what we've seen up until now. Okay, and we can even say that wave 2 is likely to come around 111.4 or something like that. Wave 1's not finished, so we don't know. These are all sort of rough estimates, but around this area, just like I mocked it up, something like this taking around the same time. Okay, a lot of people are going to miss this because they're looking at the liquidity map, they're doing that analysis just like we just did, they're seeing 125, 124, high 124, 125 as being the ultimate target. They're thinking in terms of a straight line, they're not thinking in terms of how it's going to matriculate up and down. Catches most beginners off guard. And these retracements are not going to be just 5 minutes or 2 hours. They're going, the first retracement, i.e. wave 2, is always going to take just as long, if it's pure impulse, as wave 1, thereabouts. Okay, That's what most people are going to miss, but not you because you watch this channel. All right. What about altcoins? This weekend, let's put this in perspective. This move, it's a breakout, but it's not anything to write home about. Bitcoin literally moved all of 4.5%. Big whoop. 4.5% is nothing to write home about. And in that time, what did altcoins do? Not much of anything. And what is my overall trade thesis? If you've been watching the channel, you know that this is the final opportunity that altcoins have to move out of the way before Bitcoin retraces heavily. Okay? This, again, is the final opportunity, this matriculation to the range highs of this 75 plus day channel is the final opportunity that altcoins have to begin their alt season before Bitcoin retraces, and then they must also retrace, right? So if altcoins don't do that, they'll be breaking multi-year levels of support, most of them, and that's highly unlikely. So my trade thesis on this channel has always been that's going to happen, and it's going to happen for sure because it's so unlikely. The probability that 7 to 10 to 12 years of support is broken is very unlikely. Support is support for a reason, okay? So that's what we're going to look at now, all right? If altcoins are going to move, question is when, all right? So let's start with the others. Others, remember, is all of the altcoins minus the top 10 in market cap. It's what you should be looking at right now. Anybody looking at Bitcoin dominance charts, anybody looking at total 2 or total 3, it's inaccurate. It's highly inaccurate. Okay, so others, we still have this larger channel, this larger up and to the right corrective flat, and we're at the bottom. So we're gonna focus on this. What do you see there? Okay, it should jump out at you. What should jump out at you? The fact that you're looking at a bullish reversal pattern, inverse head and shoulders. Okay, that should jump out at you. The fact that it's a rounded bottom. You should look at this and think, oh, that's a very nice bottom that has yet to break out. And that's exactly what you should be seeing in your watch list. You should not be seeing much of anything in terms of altcoin bullish movement, right? Some obviously have moved, but they're few and far between. Most altcoins at this point are still just stagnant. They haven't done anything yet, okay? And this is exactly what's being reflected in this others chart. But it's coming. That's the beautiful thing. It's coming, and it's coming in the immediate short term because this breakout takes you to the next likely target up here around 370 billion. Okay, that's a move like so. Okay, that's your wave 1, wave 2. That's what you're looking for. That's imminent. Okay, and it's imminent because this price action is extremely likely to yield a bullish breakout. Okay, so that's the others chart. That's what the others chart is saying. Let's have a quick look at the others dominance chart now. Okay, others dominance on the 4-hourly time frame is still also in this at the end of this flat correction. So you have an up and to the right bullish flat correction. Remember, others dominance is basically how much more dominant are altcoins vis-a-vis Bitcoin. And right here again is the little consolidation after you've completed the corrective pattern. So this corrective pattern, remember, it's in the context of abutting a 500-day resistance. Okay, so it's very bullish. And so you should look at this in kind of the same way as you're looking at the mini consolidation we just looked at in others, as not necessarily an inverse head and shoulders, but here you do see 3 touch points, a W reversal, okay? Provided that this hold around here, you have 1, 2, 3, you should continue to the upside. Remember what this means. If others dominant is going up, that means altcoins are beating out Bitcoin. That is the mark of alt season. Up until now, you should not necessarily have seen anything wholesale. Yes, some altcoins have run. This is true. But by and large, most have done nothing since we last spoke because you've been in this mini consolidation that is just on its final leg. Why do we know that? Because 1, 2, 3 times the charm. You typically see this in reversal patterns. It's called a W reversal. Guys, that's my analysis for today. Hope this was helpful, useful. Like, share, and subscribe. If you got value, consider joining my crypto portfolio mentorship and consultation service where you can trade directly with me. We start off with a 2-hour call onboarding, choosing up to 5 altcoins. Why 5 altcoins? So that you can actually trade them and not and actually execute on them. And also, it's plenty to make life-changing wealth in the bull market. So we choose altcoins that are actually going to run. We weed out altcoins that are not on support, that are not finished consolidating yet on a high time frame. So that is the crypto portfolio mentorship and consultation service. And during the course of the bull market, you will get regular high probability resistance and support levels so that you can snowball your profits. That and much more in the program. You can sign up to that at the pinned comment below. There's a link to my Buy Me a Coffee website. If you're only interested in my take on one particular asset or one particular indicator and you just want some analysis on that, you can order single asset analysis for $120 American. Send the payment through any of the 4 payment methods. Email me, and within 24 hours, you should receive the pre-recorded analysis in your inbox. And you can even follow up with a couple questions that I'll get back to you on. That single asset analysis instructions also in the pinned comment below. Last but not least, BTCC, the exchange partner for this YouTube channel, is currently offering, only through my sign up link, 10% cash back on any new deposits of 500 USDT, the equivalent or more. Okay, so 500 USDT or the equivalent or more, you get 10% cash back. All you have to do is trade either leverage or spot once, wait 7 days, and you should get your 10% cash back, no questions asked. They've done that very well and very on time for most of you. A couple of you have not yet received it, but that is being worked on. Apologies for those of you who have waited longer than 7 days. Guys, that's it for me. Take care. Bye.
Prevalent time slot, I vocalize, too deep to localize, even when I'm right on the surface. You act surprised how I work this, but I can't lie. Many a good alibi, I'll catch you later. Visions are vividly enhanced with emphasis and amethyst to develop morale advantages which help us manifest magnanimous. We body vitals like evangelists. So listen when you're dealing with people who be revealing premonitions with precision. At least that's what I'm aiming at for now. I speak the language of the world, meandering throughout the crowd. Used to feel safe to say anything, but now it's a risk. It's hard for me to let go when all I can do is reminisce. Gone like the wind, here's where I begin. Should I smile or should I grin what's happening? Gone like the wind.